Hi, this is the Business Guy. We're going to talk about how to get a mortgage. You probably already know that a mortgage is a loan used to buy a home, and it's a good idea to get as much information as you can about getting a mortgage before you start shopping for a home. And the best way to avoid wasting time is to get to know the key players and the process. And the best way to do that is to talk to somebody with experience. So today we're going to talk to my good friend Bob Zielinski. He is the Vice President of Sales for U.S. Mortgage, and he's been in the mortgage industry for the past 28 years. And if you appreciate me bringing you one of the top experts in the mortgage industry to answer these questions, please click the like button below so YouTube promotes it. Thanks so much. And if you haven't already, you can click the subscribe button below so that when more videos come out like this one, you'll be up to date right away. Okay, so we're going to bring on Bob Zielinski now, who I talked to you about, and let's go ahead and get Bob on the line right now. How you doing, Bob?
I'm doing well, and looking forward to having a conversation with you.
Oh, it's our pleasure. Bob, we're talking today about how to get a mortgage. So maybe you can tell us about your experience in the mortgage industry.
I've been in the mortgage industry for about 38 years. I've been practicing mortgage banking since 1983, right out of college, and I think I've helped well over 10,000 families get mortgages throughout my career.
Now, when you give a mortgage, what makes you decide whether or not to grant somebody a mortgage? What's your thinking behind that?
There's a lot of things that a mortgage lender looks at when considering somebody eligible for a mortgage. There's so many different ways today to qualify for a mortgage. And the good news is we have lots of different mortgage programs out there to help people. There's a lot of different angles you can come in at to get somebody qualified for a mortgage.
Say somebody doesn't have the greatest credit. Maybe they got divorced and they had a spouse who jacked up their credit cards or other things that happen, job loss in the past or something like that. How can you help somebody like that who might have a difficult time qualifying because of credit?
And that's a really good question, because everybody has something going on in their life, whether it's a job loss, a medical hardship, a familial hardship. There's all kinds of issues that people run into, and life happens. So with those situations, the first thing you want to do is have a conversation with a professional mortgage lender who has seen these situations, and you need to share with them what happened in your life, what caused this hardship to occur. But the good news is there's hope out there. I just recently helped a client who they suffered a family hardship, and it caused them to have 48 months of consecutive mortgage lates, if you can believe that. And there is hope for that type of a borrower. We have a program called expanded credit, which means you have to explain your circumstance and let me digest it, let me look it over, and we figure out the box that you fit in under the expanded credit scenario.
So it's not like all hope is gone as long as there's a justifiable reason why the credit happened. And you can see that, I mean, the key thing is you want people to pay the loans back, right?
That's right. That's right.
And if there's something that happened in the past where they had a hard time, but you can see looking forward, there's very likely they're going to pay the loan back. That's you're going to be a little more lenient there, maybe.
Yeah, we analyze what happened in the past, and we look forward to what is going on in your life currently. You may represent, you have very good job stability now. In the past, unfortunately, you were self-employed and you had to file for bankruptcy. So there is hope in those departments, yeah.
Now, what's the reason mortgage lenders make the borrowers jump through so many hoops to get a mortgage?
The reason being, lenders have to sign what we call recourse agreements with these investors, whether it's Fannie Mae, whether it's Ginnie Mae, who issues VA loans or FHA loans, or a private investor, hedge funds. And the lender has to sign recourse reps and warrants with these investors that they are giving information that is true, and they have done their homework in making sure that it is factual. And if they hadn't, then there are repercussions to the originating lender or the originating loan officer. You can literally, if there's a history of this going on, as a loan originator, you can actually be disbarred from performing mortgage activities. by Fannie Mae and Freddie Mac. And once that occurs, it's very difficult
Yeah.
to do business as a mortgage lender or an originator once you've been labeled that you're issuing problematic loans that have a history. So
Yeah.
it's
So
they take it.
if you got sloppy and didn't make people jump through the hoops, and you didn't make people provide all the income verification, or you try to take shortcuts and twisted some facts and provided some false documentation, you could lose your ability to make a living. Yeah.
Absolutely.
Yeah. So
No,
it's not just so you're
yeah.
not just being nosy.
No, I know it's a very intrusive process, but it's, I always tell people, there's different ways to get a mortgage today. And
Mm-hmm.
sometimes you may have to take a big jar of Excedrin. And then there are sometimes you may only have to take a few Excedrins to get through the
Mm-hmm.
process. But one thing I tell people is to be patient and don't give up. Just keep at it. It is a arduous process. Just like if you ever have to deal with the IRS, it's a painful process sometimes. But understand you're borrowing money from an institution that wants to make sure that their credit decision is fairly close to being foolproof.
Yeah, yeah. So it's like going through the body scanner at the airport. You can stand there and scream and beat your chest and say I'm a good person, or you can just walk through the body scanner. There's only one
They,
way you're going to get to Paris, France, or Los Angeles.
yeah,
Right?
just take a dose of patience
Yeah.
and work with your lender closely.
And aside from the things like credit score and income, what would you say would make you say, no way, no how, this guy isn't getting a loan?
Certainly, a recent bankruptcy is
Mm-hmm.
very difficult to overcome. That's probably the most difficult, or a recent foreclosure on a
Yep,
prior
yep,
mortgage
yep.
is certainly difficult to overcome.
Mm-hmm.
In those cases, I would recommend probably searching your local community. There are private investors who lend money to these circumstances, but they do require typically 30 or 40% as a down payment. And they will
Mm-hmm.
charge you a little bit above market rate because it's a risk reward relationship in those types of
Right.
situations. And the higher the risk, the higher the reward to the investor. You're going to typically find when you're dealing with private investors, interest rates anywhere from 10% to 12% who fall into those categories that unfortunately the bank has said absolutely no way. So there is still hope for you,
Mm-hmm.
but you'll have to deal with the private market out there.
I
And
heard a
most,
quote. Yeah, I heard a quote, and it said, "The older I get, the less I listen to what people say, and the more I watch what they do." And I think it's probably the same way in the mortgage lending industry, right? Somebody can say I'm a
absolutely.
great person, I got a lot of income, have good hopes, but if they have bankruptcies and foreclosures, especially recently, that's going to weigh a lot more than just them flapping their lips and saying how great they are.
Absolutely. But it's
Yeah.
still worth a conversation
Mm-hmm.
with a mortgage professional in your community or your area that might be able to refer you to a private individual or company that can fund these types of loans.
Yeah.
So
Now, what's the craziest mortgage you've ever given? You've been doing this for over 28, almost 30 years. What's the craziest mortgage you've ever seen?
the craziest mortgage I've ever seen, I guess it's not very logical, but I've had older people apply for mortgages who are in their 90s and they apply for a 30-year
Right.
mortgage,
For a 30-year mortgage at age 90, yeah.
so that might be a little
Yeah.
bit of a whopper.
Now, what do you do in
But
that case?
oh, absolutely, you fund that loan. If
Yeah.
the person qualifies, absolutely. We have equal lending laws out there that regardless of age, color, or creed, we have to lend. And if you qualify, you get the money. So I just wanted to give a couple of tips, though, to your audience. If they're searching or maybe they recently had some hardships in their recent lives, one thing I would tell folks to do is when you want to apply for a mortgage,
Mm-hmm.
gather up your documents, gather up all the
Mm-hmm.
information for your mortgage consultant. And what I mean by that is dust off your last 2 years' tax returns, pull out your last 12 months of bank statements, pull out your asset statements, pull those types of documents out, dust them off, and get with a local, or they can certainly call me, and I'll be more than happy to help them out. Contact your local mortgage originator and have a dialogue. It's just like going to a professional like yourself. If you want to get all the facts, you have to provide information to the professional and let the professional diagnose your situation. But you need to have these documents ready, and that way we can rule out or rule in certain types of mortgage programs. For my friends out there who are self-employed, for example, I would highly recommend, of course, pulling out all the tax return information for the last 2 years. Let a local person take a look at it, and also pull out your business bank statements for the last 12 to 24 months. And I'll tell you why I'm recommending that. Because there's programs out there for self-employed people that you do not have to provide your tax returns. But provide me your last 12 months or 24 months of personal or business bank statements. And what we can do, we can look at the deposits that are going into your personal or business bank account, and we can average out those deposits. And then we use an expense ratio that we deduct out of those monthly deposits based upon your profession, whether you're in manufacturing or you're a sole proprietor realtor who doesn't really have any overhead. We typically will go anywhere from 20% to 50% deducting out as an expense ratio. And then that's the net income that we use to qualify you. That's one program as a self-employed person you can utilize. Another one is if you give me a P&L statement, a profit and loss statement of your business for the back 12 months. And as long as your CPA or accounting professional signs it, we'll go with that P&L statement. Another option is if you're somebody who receives 1099 income statements, we will work off of the 1099 statements for the last 2 years and average the income. In all three of those options, I did not use any tax returns at all. So I want to share that with your self-employed audience who is finding this very cumbersome because their income on their returns are not matching up to your true income because you have all the wonderful opportunities as a self-employed person for various deductions, etc., that short your income. But by using these alternative methods of qualifying, I help so many people out there who fall into that situation, and they're so elated that there is an option out there. So that's an area I would offer your self-employed audience.
Yeah, so many people have probably gone to banks that don't have those alternatives, and they throw up their hands and they say there's no hope and they give up. But now you're saying you can offer those people some hope and some alternatives that normally wouldn't qualify them to get a mortgage, but you have ways that you can get around that.
Yeah, no disrespect to my banker friends out there, but you are spot on. The banker community does not typically offer these types of alternative methods for creating income. They just don't. It could be that the bank's philosophy is that we do not lend money without tax returns. And there's companies out there, bank companies, that follow that philosophy. There are banks out there, some of the big 3 or 4 banks, they literally have trillions of customers, millions of customers, that they can pick and choose the highest quality loan applications to work with. Therefore, they don't need to put themselves out there at any exposure of additional risk that these types of programs bring.
Yeah, so somebody like you would have alternatives that a lot of banks wouldn't. Even some of the big banks wouldn't have these kind of things you're talking about.
That is correct, because they just don't want to take on that additional risk. Whereas private mortgage companies like the firm I work with, that's what we're all about. We're all about a holistic approach and offering all types of alternative financing for a consumer.
Now, how are your interest rates through U.S. mortgage going to compare with like a Wells Fargo?
Our mortgage rates are just as competitive as a Wells Fargo.
Yeah.
So that's, we're we're an aggressive mortgage banker, and we want to lend money out. That's what we do 24/7.
Yep.
We're not a bank where you have different silos of income coming in that, mortgage banking may not be their primary responsibility or objective.
Now,
But for us,
now how can
it
people
is.
how can people get a hold of you, Bob? You have some programs that a lot of lenders don't offer, and some alternatives for people that are often turned down. So how can they get a hold of you to take advantage of the programs you offer?
I'm always available. You can write to me via email, and it's very simply rzielinski@usmtg.com. Or my direct line is 954-415-3045. And I'd be glad to help any of your clients or customers out there who want to use me as a resource and bounce ideas off of me. I'm always here to help folks. I get a great pleasure helping people out in achieving the American dream, whether it's for your primary home or whether it's to acquire a second residence or whether it's to acquire investment property. I can cover all three areas.
Yeah, Bob's incredibly knowledgeable, incredibly experienced, and incredibly caring and helpful. So if you want to find a loan that may suit your needs, that maybe you couldn't find a loan any other way, or maybe you've been turned down a lot, give Bob a try. And he might be able to find some solutions for you that might be able to help. So thanks, Bob. Thanks for joining us today. We appreciate it.
Thank you. It was a pleasure being with you and your audience, and have a good day.
Okay, real good. Talk again.
Thank you.
Bye-bye.